Hello everyone, my name is Hari and today I would like to introduce to you some very basic concepts that one must be knowing before getting started with trading or investing in the Indian stock markets. We'll be starting right from absolute basics so that everyone will be able to follow up with the videos. So all of us are here to learn about the markets. And may I just ask you this question? What have you heard about the stock markets till now? Like, what is your present understanding about the stock markets? So, a stock exchange is nothing else but a meeting place for buyers and sellers. Let's assume that I have a stock to sell. So, what I'm going to do is I'm going to place a sell order through my stockbroker to the stock exchange, while a counterparty who wishes to purchase a stock will also be placing an order through his stockbroker, which will be coming to the exchange. Now, when there is an opportunity for a match being made between the two parties for our trades, a trade will be completed, a trade will be fulfilled, and I'll be able to sell my stock, and the other person will be able to purchase the stock that I handed over to him. So, a stock market makes it possible for order fulfillments between two parties with regulations. It's always an auction based mechanism that's happening in the markets. So let's take a case that I want to purchase a stock. So if I'm planning to purchase a stock, I will be looking forward to purchase a stock at the lowest possible price at that instant in the market. And if I'm planning to sell a stock, I'll be looking forward to sell it at the maximum value that is trading at the moment for that particular stock. So it will always be an auction based mechanism that is going to fulfill the trades between the two parties. And whenever there is a suitable match being made, the trade will get fulfilled. There are two kinds of activities that you can undertake to make money from the stock markets. The first one is investing, and the second one is trading. So, investing is a kind of passive activity, while trading is an active activity. So if you are investing, you can gain capital appreciation for your investments, and you can gain income from dividends. And if you're a trader, your trading activity based on a working trading strategy is what is going to get you the money. At first, let's have a look at capital appreciation. So, capital appreciation is nothing else but an increase in price of the asset that I have purchased based on the increased demand associated with it. So, the demand might have increased due to a certain number of reasons. It can be better management decisions, a new economic policy that is favoring the industry, and other n number of reasons. So, capital appreciation is nothing else but an increase in price based on the increased demand for a particular period of time. So, let's consider an example. That is, I'm purchasing share A at 100 rupees today. Now, if the price of share A becomes 135 the coming year, I'm getting a capital appreciation of 35 rupees or 35 percentage in this particular case. So, this increase in price as compared to my purchase value is what we call as capital appreciation. In the white chart given below, you can see the statistics of Bajaj Finance for the last 1 year. And we can very well see that the price has increased by 75% in a duration of 1 year. See, your bank maximum is going to give you 7% for FD. While if you had invested that money in Bajaj Finance, you must have got a 75% returns, that is your capital appreciation over the last 1 year. Now we'll be discussing about the next point, that is dividends, that is you receive while investing. So dividends are nothing else but a profit share that the company in which you have invested is going to give you. So it is the profit share that the firm gives to its shareholders as a token of appreciation for staying invested in the firm. See, you are a shareholder, so if the company is making money, you should be getting some kind of benefits, right? So that is what you call as dividends. There are multiple reasons why firms give dividends. First of all, it will attract more investors. People who see that a firm is giving a good dividend, they feel okay. this company is doing good and there is potential in investing it for a long run. So it attracts more investors by giving frequent and good dividends. It shows the stability of the firm actually. Hero Motor Corporation has been giving an average dividend of 68 rupees for the last 5 years. Now let's discuss about trading profits. So trading profits is nothing else but the difference between your sell value and your buy value. So you make an entry based on technical analysis, price action levels, and various other tools to conclude whether you should purchase or sell a particular stock at a particular period of time. So trading is comparatively higher in risk compared to investing, while the profit associated with trading is also very high. That is, if you have a proper trading setup, a proper strategy that works very well for you, it is the most profitable thing. So on the right hand side, you can see our backtest that is being conducted to develop our new strategy on India Bulls. So if you see this, you can understand that over the last 2 weeks, this particular strategy would have given you 13% gains. That is 13% gains in 2 weeks time. It's a good number. 13% of your investment. So with that, we conclude the first video, that is of introduction to the stock markets from basics. So thanks for watching the video. Do subscribe to our YouTube channel to get more content related to the stock markets. And let me know if you have any suggestions in the comment box below. Thank you.